Legendary macro analyst Darius Dale is here, and he's going to give you his breakdown of everything going on with the Fed right now and how it's going to impact your cryptocurrency. In my opinion, this guy is leading the charge of macro analysis. He's got his own site, his own business doing macro analysis, 42 Macro. Check out the link in the description. We are super lucky to have him with us today, so smash those like buttons and let's hear what Darius has to say about everything going on with old Jay Powell and the Fed. Welcome to the show, Mr. Darius Dale. Can you explain just really briefly what you do to the audience who, for some reason, I don't know where you guys could possibly have been over the last week if you haven't seen this, man, but please, for the uninitiated, let them know.
Absolutely, man. So my name's Darius Dale. I run a business called 42 Macro. We fancy ourselves as what we call macro risk management advisors. We help investors get abreast of macro risks, how those are changing, and ultimately what to do about it from the context of their portfolios.
Yeah, so you've used that word macro several times. Very quickly, what is macro, and is crypto macro?
Yeah, well, it's increasingly become macro, right? And I think that's a loaded question, but I'll start by saying, what is macro? So macro is everything that's not micro, right? We know what micro is. Micro is what you and I do as consumers, what businesses do, the decisions they make, and ultimately how they impact the economy. Macro is everything beyond that. It's what the government's doing with monetary or fiscal policy. It's regulatory agenda, geopolitical policy. It's what the overall economy is doing. These big aggregates like growth, like inflation, things of that nature. And ultimately, what we're trying to do is use our ability to forecast some of the more critical variables in that big, broader subset of things in order to sort of kind of help us guide our expectations how markets are likely to evolve.
So we could get to actually let's get to if crypto's macro in a second. Where do we stand right now? Obviously, yesterday was huge. I joked that I was going to tell my kids that this was the Super Bowl of 2022 was the Fed meeting. What happened yesterday?
Nah, man, I would argue that's like the preseason game.
Oh, okay, all right. Well,
That's
an interesting response. Let's hear it. Lay it on thick,
absolutely. So
Darius.
we are very early in the process of the Fed tightening monetary policy. Now, the markets, the rates markets, interest rate markets, money markets, things of that nature, bond markets, they've already priced in a significant amount of that tightening. But that doesn't mean the tightening has occurred, right? There are actual real world technical effects that occur when the Fed hikes the interest rate or shrinks its balance sheet that have yet to actually take place. And those things do have impact on asset markets and they have impact on the economy on a lag in terms of credit creation, inflation, growth in that regard. And so in terms of like this being a preseason game, we haven't even seen them get to actual liftoff. We haven't even seen them actually introduce quantitative tightening, balance sheet reduction, and we will see them implement both of those initiatives, those levers, those policy levers in the next kind of 6 months or so.
Okay, so if this is preseason, there's a lot of, I guess call them memes, right? Where people say, oh, it's priced in, oh, market's forward looking, oh, worst is over type thing. And my gut tells me that with this insane not insane, but this huge capitulation in crypto, that until we get actually the next dagger, properly put into the body, that we should probably have seen a lot of the move. What is your short to sort of midterm feeling as to like where the markets how much the markets have processed this?
Yeah, that's very correct. Your interpretation is spot on. And the reason I believe it's spot on is sort of twofold, right? You hit the nail on the head in saying, hey, look, the markets have priced in a lot of the tightening and a lot of the weakness that we're probably going to see as a result of what's already priced in, on a forward-looking basis. And so a lot of the positioning dynamics is something we track through the lens of the options and the derivatives markets across various asset classes. Positioning is very skewed to the bearish side across pretty much every asset class or most every risk asset. And so it won't take much as it relates to not getting incremental bad news in order to perpetuate a relief rally because we're not yet at a point in the growth cycle, whether it be U.S. growth or global growth, for assets to sustain a material correction. You typically only see bigger drawdowns, lasting drawdowns when the growth outlook is really coming under question. And that's not something that is occurring at the current juncture. Right now, we're just repricing the change in monetary policy expectations.
Got it. So is this just Fedland we're in now? Is there any real market dynamics? We had yesterday, Microsoft came in, they had a good earnings report, and it seemed to really deliver some relief to like the market in general. So it doesn't
Yep.
feel like we've completely like left the building as far as like what the markets are doing for prices. But it also then you could look back at the last 2 years and go, well, was any of this insane growth really due to fundamentals, or are we just still unwinding this incredible, rocket fuel that happened because of the Fed, and that we just need to accept that there's just this padding layer of value that just shouldn't be there effectively in normal land?
Yeah, no, look, and it was deliberate, right? The Fed doubled the size of its balance sheet throughout the pandemic, and because it wanted to provide relief to borrow financial for wanted to provide relief in the form of liquidity provision for borrowers and consumers and people who to spend money, the wealth effect, all those things. And so the Fed accomplished its goals, right? This was a very deliberate process. The problem is, while the Fed was accomplishing its goals, fiscal authorities also had goals, and their goals was to get as much money into the economy as they possibly could. And that is ultimately resolved, or sort of was resolved by some pretty record supply demand imbalances across many segments of the of the productive capacity of the economy. And so not just in the U.S., but obviously globally as well. We've had global supply chain disruptions. So the net result of that is that, hey, as long as we had the Fed pouring money into the punch bowl, and we had the fiscal authority pouring money into the punch bowl, and at the end of the day, we wound up with a punch bowl that was just overflowing in liquidity. And the problem with that, obviously, is now inflation, and the Fed is doing its best to sort of address that.
Yeah, well, we know something's weird, right? Where, I come from a sort of traditional centralized development world where getting $1 million check for your startup, that is like you're popping the bottles of champagne, right? That is a big deal. Whereas right now, you need to beg and plead as a VC to get your money in, because everyone knows that getting your money out of cash into some kind of project is a much better play. It just felt like the world was not spinning on its axis, so it makes sense.
Yeah.
But I guess the question is, are we stuck in this cycle now where what Jerome Powell says is kind of the motion of the ocean for the foreseeable future?
Yeah, and that hasn't changed. What Jerome Powell has said the entire time since March of 2020 has been the motion in the ocean. It's just now the ocean is rocking another way. Think of it as the tide. With the tide coming in, or sorry, yeah, we were on the beach, we're hanging out, the tide was out there. Now the tide's coming in, and we gotta get off the beach. Mm-hmm. And nobody wants to get off the beach, but at the end of the day, you gotta get off the beach, otherwise you're gonna drown. And so that's exactly what's happening right now with respect to financial markets. Is we're losing beach. You think about like the Kathy Wood names, right? Those peaked in February of last year. We lost that part of the beach because the tide came in. Now we're just continuously losing more and more beach, and this will be the process as it takes place throughout this whole year. And that's not to say that every day we're going to lose more beach. It's going to go back and forth and ebb, but as on a trending basis, you should expect to have more beach, 6-9 months from now.
Is crypto macro? Is this all part of the same ball of wax here? Is there any gap in air in your mind?
Yeah, I think it's increasingly macro. And the reason I say that is because so much of the sort of bull case for cryptocurrency is the adoption cycle, right? It's this concept of more and more people are coming into the network and coming into the asset class, and particularly from the perspective of institutionalized, centralized finance. And as long as those people are getting involved at the margins, the more crypto itself will be subject to, traditional finance risk management, the stuff that I specialize in. Hey, look, this is an asset that has a volatility of XYZ, and it's correlating ABC with all these other assets in our portfolio. Therefore, we now have to take down our risk and our exposure to that. And I think that's a lot of what we've seen in crypto and of late. I think obviously there's also been liquidations on the retail side as well. That has all been sort of feeding into the drawdown we've seen in crypto. But the reality is this is now a feature of the system, and it'll be a positive feature of the system, in so much that I would argue going back to the fall of 2020, it was a positive feature of the system, the institutional adoption, the adoption of incremental investors. And ultimately, we just have to deal with the cycle that comes with it, which is the one that has a little bit more risk management and more sort of correlation to the broader macro environment with it.
Yeah, so it sort of feels as though the finance bros who saw the money spigot getting turned on were like, great, we're gonna long all super risky assets, and they put
Yep.
like crypto as sort of like the nouveau Nasdaq, and they were like, cool, let's just long this space as if it's like penny stocks on the Nasdaq.
Totally.
And so now we're seeing kind of like the opposite side of that. Is there a sort of, it sort of feels as though the ebb and flow of this is as, Fed tightens and then eventually, goes back to more neutral. Do we just get kind of like crypto starting to behave a little bit more like the NASDAQ over time? Is that sort of the general outlook that would be actually quite good for the space?
I think it'd be great for the space if it just behaved like a higher beta version of the Nasdaq. The problem with the space, in my opinion, is that if it's too high volatile, you can't get new incremental investors, and then you're sort of left with it, sort of growing under its own weight. With this, we know with Bitcoin in particular, we're going to get that supply. That supply is coming. It's obviously coming at a slower and slower speed, but the supply is coming. So you need incremental adoption, albeit at a slower speed, to maintain the same price level in terms of supply and demand. So this is. I think it's all a good thing, right? Like, where was Bitcoin in March 2020 relative to where it is today? We have to just be, as investors, be willing to accept the fact that growth cycles, inflation cycles, monetary policy cycles, fiscal policy cycles, nothing moves in a straight line, or trees don't grow to the sky. We have to understand that these things are periodic functions and just accept the fact that they are, and invest from that perspective.
Do you see the growth that we had from March 2020 as something that's going to get completely unwound, or do you think that it really feels as though since March 2020, and at least in crypto, we had a DeFi mania, we've had a metaverse mania, we've had NFT mania, we've had a bunch of pieces of the equation that feel like real growth, that feel like real product categories with viability that make, effectively the world a slightly better place. Do you think that the unwinding of these policies brings us and resets us completely, or do you think there's a layer of permanent growth there that we could sort of, stand on?
No, no, it's very much a layer of permanent growth. I liken it to sort of the internet, right? Like going back to obviously the internet was developed in the 70s, but it was given to us as consumers and businesses kind of in the late 90s. And there was so much development on the internet then that obviously didn't survive. Pets.com was a large cap stock that went away in the bursting of the dot-com bubble. And there were many other stocks like that went away in the bursting of the dot-com bubble. And there are many technologies and companies and businesses that went away. But the reality is this thing called the internet remained, and a lot of great businesses that were built at the time on top of the internet and through the use of the internet, namely Amazon being kind of one of the biggest, more obvious contributors, those will last. And so we have this process that we're undergoing in crypto right now is the process. It's sort of our first, learning about, okay, this the internet thing, this is awesome. It's here, DeFi. There's all these different sort of use cases for this particular technology. Let's figure out what the best use cases are and how to actually sort of, grow them from this point. But the reality is we have to take a lot of shots in the dark. It's just like VC investing. You got to take a lot of shots in the dark in order to get to the ultimate winners. And so those winners and losers are still here. It's just going to be hard to figure that out over the next few months and quarters as it relates to, the broader liquidity spigot being turned off.
It does feel, obviously, the meme, and my fiance makes fun of me that whenever things go horribly wrong in crypto, we always see it as an opportunity, and she mocks me. She's like, anything could happen, and you guys would see it as good. But that it is true, right?
Depends on your time horizon, right?
Well, if you look a little further out, it's hard to imagine we wouldn't look back and say, hey, imagine investing in all these metaverse protocols in the crash of 2022, and then where are we going to be in 2030? There's going to be some sustained winners.
I would even go as far to say 2030. It could be 2025.
Mm-hmm. Yeah,
these cycles, these growth inflation policy cycles, these are the main drivers of the macro trading environment. The stuff that is impacting crypto markets. Those cycles tend to be 3 to 4 years. Right, like you kind of it's this sort of stationary time series where there's a periodic function on growth, inflation, and policy on a lag to both of those things. So we're kind of at the we passed the peak of the growth sine curve in second and third quarter of last year. We're traversing past the peak of the inflation sine curve right now, and then we'll traverse past the peak of the policy sine curve, several quarters from now, and then the whole thing will just reset. We'll start over again, and so by the time we're having this conversation 3 or 4 years from now, we'll be back at another high. In Bitcoin or something like that, or really caressing off the high.
Does it always have to be the year after the halving that we peak, Darius? Does it always have to be the 4-year cycle?
I don't know. I think part of it may be the fact that Bitcoin started in 2009 at the lows of the economic cycle. like a
Yeah.
very generational low at the economic cycle. And so Bitcoin, that halving cycle is sort of tethered to the growth and inflation cycle as a function of when it started. So maybe it is the case. I'm not sure what will break that.
Interesting overlaps between sort of just like the history of money and Bitcoin. I
Yeah.
wanted to ask one specific question before our wrap up, which is, are you following any sort of specific sectors, for example, NFTs, which do seem to be, in a weird way, the least correlated of the assets here in crypto? And also, we have lots of data that these are appealing to kind of new market participants who are not necessarily coming in because they're diversifying away from Bitcoin and ETH. They're just coming straight to the NFT. Do you have any perspective on that or feelings towards these subsectors of crypto?
Yeah, no, that scares the heck out of me, man, because typically when you talk about uncorrelated in the context of a market crash, what that really means is the asset is not trading, right? And so if the asset's not trading, you get this false sense of security that that's not going down in price. But the reality is eventually the people who are levered in these spaces eventually have margin calls from their other parts of their portfolio, and they cause them to have to eventually sell the things that quote unquote didn't go down in price. And that's when you find out that the price is a wrong price. It's not the right price.
So
And
you're
so to me,
so you're
it's
saying that the
very reminiscent of
illiquidity, the
it's
illiquidity of
liquidity.
JPEGs
Yeah.
is what's going on.
Yeah, totally. And it's a place where you're like, hey, well, this hasn't gone down as much, so it seems favorable today. But the reality is that price you're seeing on the screen, or the fact that it hasn't traded and hasn't gone down as much, is a lie. It's a
What if it's
mirage. It's
gone
an
up?
illusion. It could have gone up, but the reality is if you look at every other price across your screen, across stocks, credit, cryptocurrency, all these other commodity markets, it's more than likely that the price has not gone up. It's more than likely that the price has gone down. It's just not clearing and trading. And so when this is a real thing. I made this point a few weeks ago when I said, hey, look, 2022 is going to be the year where unrealized gains turn into realized losses, because people are going to figure out that you might have an unrealized gain in your crypto portfolio in this very illiquid altcoin, but there's no market for it. Hey, the market before it is actually 20, 30, 40, 50% below the current price. So if you try to get out, you're going to move the price 20, 30, 40, 50% lower.
Well, I definitely appreciate that. It's a very fair warning. And, it really comes to the question of, how is the best way to survive? Because, what we've seen is that people, at least in the crypto space where we like to focus, surviving is thriving. If you're here for 5 years, most people have done well. And when I say done well, they usually have done astronomically well. But it's really just about sticking around. The stories you hear about people not doing well in crypto are, oh, I got wrecked and I left, and, I had, egg on my face.
A piece of pizza with my Bitcoin. Yeah.
Yeah. Even though I'm sure that guy did okay because he had so many, but at the same time, it's like most of the time, if you stick around and you at least just continue to fight another day, then you're doing all right. What would you say is like the best way to survive right now?
100%. I say this all the time. Look, if you have staying power, none of these conversations are relevant. The problem is no one has staying power because we're all human. We all respond emotionally to losing money. And so and a lot of times I think the best way to have staying power is to only invest money you can afford to lose. The second your investment portfolio starts to infringe upon your lifestyle, and you start losing money and you actually have to make lifestyle changes, that's when you really start to make mistakes as an investor. So I think the key risk management point for crypto, for any asset class, is making sure your position sizing it matches your sort of investment preferences, your liquidity preferences, your lifestyle preferences, all those things, and then you'll do just fine, because you won't have to panic sell Bitcoin if it goes to 20,000, right? Someone who's long too much Bitcoin relative to what they need to spend on a day-to-day basis will have to sell Bitcoin when it goes to 20,000, because they'll be freaked out about it going to 10,000. And you don't want to be that person, which means you're probably going to have less gains on the upside, but you're likely not to make mistakes and sell all the way out of the asset class on the downside as well. And that's how you maintain this surviving is thriving mentality.
Yeah, I love it. If there's one piece of wisdom or alpha, whether it's investing or life related, that you want to leave the audience with, what would it be?
Ooh, put me on the spot. Might have to edit this, but yeah. So life was.
Doesn't have to be too profound. It's just whatever's on your mind, like something that you think you want people to just generally be thinking about, in 2022.
Absolutely. So yeah, don't invest in a emotional state. Like you've seen a lot of red on your screens already in January, and it has an impact, and you start go down rabbit holes to either defend your position, or you go down rabbit holes to make it seem like your position's wrong and you got to sell the whole thing. The reality is none of that's right. Go back to the same process that you had to get you into the exposure and repeat that process. And if that same process says you need to sell the exposure, reduce your exposure to the exposure, or increase your exposure to the exposure, just do that. I think a lot of investors make the mistake, and this is exactly what I want to say. Investors make the mistake of risk managing their P&L, their profit and loss statement, how much money, how much dollars they've lost or how much dollars they've gained. That's the worst possible thing you can do as an investor. You should always be risk managing according to what the opportunity set is and how that's evolving over time. Whether or not it supports your existing positions or not is irrelevant. That's the decisions you should be making is based on how the opportunity set evolves.
Yeah, because one is actually, looking into the past and one's looking into the future,
100%.
right? If you're risk managing based on where you used to be on your unrealized P&L, and you're like, oh, well, if I would have sold everything at 69K, then I would be X out of X dollars. Wrong mentality, because you're now evaluating spilled milk instead of saying, okay, what's really on the table here? I think that's absolutely brilliant.
You're evaluating spilled milk instead of looking into the fridge. Yeah. The fridge has all the goodies in the cabinets that have all the cookies and stuff. Hopefully. Instead, you're looking at the floor, you're trying to clean up spilled milk, and that's what you don't want to do as investors. So, that's something that's hard to learn. I've had to teach myself that over and over and over and over. And the best way to do it is just like, look, when you log into your statements to make trades and do trades, get out. Don't look at the P&L. Don't look at it. It's irrelevant information. The relevant information is all the stuff that you're consuming to get you to make those trades. And if you need to go sell something or buy something, go sell it and buy it and get the heck out. Because if you spend any time in there looking at the P&L, you'll start to focus your emotions, you'll focus your mentality, you'll focus everything that you're consuming research on making that better. And that's the wrong way to invest.
Yeah, amazing words of wisdom there. It's you against you, usually an emotional battle here. So thank you so much, Darius. I could talk to you forever. Please, everybody, check out 42 Macro. Link is in the description. Thank you so much for coming on the channel. We hope to have you back very soon.
Indeed, my friend. Appreciate you.
Take care. I hope you all enjoyed that one. If you did, smash that like button. If you like the video, like the video. It's an easy way to show YouTube you enjoyed this content, and then the content gets shown to more viewers. As always, I'm EllioTrades. If you want to find me on Twitter at EllioTrades, we'll be with you here each and every day, helping bring attention to the opportunities, the threats, everything involved here in this crazy crypto landscape that is 2022. I thank you all so much for watching, and I'll see you very soon on the next episode.